Welcome back. You tune in to Buy Now, Sell Now, where we're getting you all the updates from the market and keeping it with the earnings season. Then a stock that is soaring away in a volatile market like this is Sheela Foam, that's up and away more than almost 16% in the trading session right now on the back of very strong set of numbers that it has posted. In fact, as far as the profits are concerned, it is seeing a seven-fold jump on a year-on-year basis at 91 crores versus 13 crores on a year-on-year basis. The revenues are also up 23%. Also, if you talk about the volumes, that are also up in double digits, 34% uptick coming in on the volume growth on a year-on-year basis as well. Now we're joined by the management, Rahul Gautam, who's the CMD of Sheela Foam, who's now joining us to weigh in on the numbers and the way forward. Mr. Gautam, good morning and thank you so much for joining us.
Good morning, and thank you very much for inviting.
Right. Mr. Gautam, your Q4 has yet again been a very strong quarter for you, with PAT surging almost to 7x. Help us understand if this kind of growth is sustainable now that the benefits of Curlon acquisition are getting realized?
Absolutely. I know it took a little longer than what it should have as far as the integration process is concerned. But now that it has stabilized, we see absolutely no issue from the supply chain or the going to the market route. Both are well oiled at the moment.
All right, Mr. Gautam, margins have seen a strong jump in Q4. Can we expect to see margins above the 10-11% mark ahead? Any number you would like to guide on?
So if we look at a little closer to that number, it's actually more than between 10 and 11. It's about 11 plus, and already trending towards a 12 number. So what I expect in the FY27 is something we had committed to 12 plus number, and I think we are close to it. There was only one issue, and that was actually a Forex issue, which got sorted out, and that created a little bit of disturbance. Otherwise, around 12 or a little above 12 is what we expect for FY27.
Mr. Gautam, your overall FY26 value growth has lagged the volume growth for both the mattress and the foam segment. Does this indicate any pricing pressure or a shift towards lower price products?
Not necessarily. It is just that the raw material prices have been fluctuating around quite a bit. And if we divide our business into the mattress part, and then there is the other B2B part of it. In the B2B, it completely goes with the raw material prices, or they're linked to that. And for a majority of the previous year, it has been that the raw material prices have been on the lower side, and that has contributed to it. But otherwise, as far as the level or the average selling price of the product is concerned, it continues to be where it is. Should be a little better, and that's what we will strive for.
Mr. Gautam, Sleepwell and Curlon both delivered strong growth. How is the company positioning the two brands differently to avoid any cannibalization?
So both are completely based on their roots. So we have Curlon. It is nature-based. It's organic. It is green. It is a natural, primarily a natural product, and that's what it is positioned as. As far as Sleepwell is concerned, it is technology-based, science-based, modern, and that's its positioning. So the two of them are reasonably apart, and all the time our effort is also to ensure that the differences between the two are celebrated, and we push them. They will follow their own destinies in that direction.
Right. Mr. Gautam, international business in Australia and Spain has posted healthy growth. What is driving the demand in these markets, and what's the outlook here? Are there any more countries that are targeted for expansion?
No, not any of the countries, because the two biggest markets, not the two biggest markets, at least the European market, which is the biggest one, is well catered for from Spain. And the growth there has been primarily on just having a very, very small portion of the market, or the market share is extremely low. And therefore, all the efforts we are able to keep clawing more and more of the share. Um, Even the EBITDA levels have been high on the Spanish one, and that is primarily on the purchasing side that we have done reasonably well. In the Australian one, I don't think there has been any volume increases. Um, yes, the gross margins have gone up. That's because of better purchase of raw materials and because of reduction of scrap rates. Uh, but otherwise, Australia is steady. Europe is growing slightly.
All right. Stacko delivered 54% revenue growth in Q4. What is the long-term strategy for the IT business, and could it become a meaningful contributor to consolidated profitability?
So these are very nascent times as far as Taco is concerned. It's doing well. It has enough orders on hand, and the targets for this year are close to about 130 crores. So that's like doubling where we are. We closed the year at 70. It's a different business, but a much needed business. And if you would see today's Indian Express, it says the government is also insisting on an Indian grown or an Indian uh, um, ERP system. And that makes us uh, very competitive as far as India is concerned.
Right. So also, what are your plans, store addition plans for FY27?
Sorry, I didn't follow the first part of the
I was
sentence.
I was talking about your store addition plans for FY27.
So last year we've added about 600. A similar number of around 500 stores would be added. They're already in the pipeline, and that should be true. Though I must say that now that we are reaching a close to saturation as far as tier 2, tier 3 towns are concerned, the rate of growth of these stores may be slightly lower, but the efficiencies of the stores will be increased.
Sir, if I remember correctly, you had given a guidance of 700 store additions. Has that come down to 500 stores, and why is that?
Not no particular reason. It is just that we are spending more on or more focus on the efficiency of these stores, which means increasing footfalls and increasing conversions, and ensuring that the stores that we open continue to um, remain profitable and continue to grow. It's just the sheer number which may have been tuned a little lower, but it has nothing to do with the quantum of business that will be done.
All right, Mr. Gautam, with that, we'll let you go. Thank you so much for joining us today. Thanks.
Thank you. Thank you very much.
Time for a short break, and post that we have Shadow Factor management coming up.